let's quickly analyze gold. Now, first and foremost, you need to understand one thing, understand the structure, understand where the market is going. So first and foremost, you need to say where is the market is going. What is the trend? Is it the uptrend? Is it the downtrend? Okay. So secondly, you need to understand where is the support and resistance of the market. Okay. So you switched the chart into a daily time frame. You need to understand where the market is going. Is it a downtrend or an uptrend? And lastly, you need to understand where are the support and resistance. Okay, so if you can see that now the market is within the range. Okay, if you can do this, you can even do this, you can see that the market is still in the range. Okay, so but then this is not what we're supposed to do. We need to analyze in a very small thing. This is a short or a small support, and then secondly, this is a small resistance. Okay, and then this is the second support. Okay, so the first support is in the 2368 price. Now the second support it is 2288. So all you need to do is to switch into a 4-hour time frame so that you may understand better. So if you switch into a 4-hour time frame, you can even see that now the market is trapped within the range, is trapped in a certain channel. Okay, so but then we don't know if that now the market will go up or will trigger this support or break that support and go down. Okay, so we need to wait. Okay, we need to wait, because if you can even analyze this more further, you can go into a 1-hour time frame. So 1-hour time frame still tells you that the market is still going down, but we are not sure until when, because here is a support, here it's a support. All right, here is a support, so we don't know where the market is going. So now there is a small resistance over here. There is a very small resistance over here. So we can now even predict now that the market can consolidate once until it's reaching here, and therefore can even go down. Okay, go down, because now if you can even insert your trending channel or your trending trend line, you can even see that it's possibly that the market can switch back into the resistance and even turn into a resistance and go down. And then you need to understand that you are a reversal trader or you are a breakout trader. You need to understand all of those things. If you are a reversal trader, that simply means that you are looking for the market to reverse into here. What you need to do is to understand that there are certain candlesticks that you need to see, and that the market you need to look at the market, whether the market is going to perform those certain candlesticks of the reversal or not. If not, that simply means that it's a red flag for you. You're not going to do that. You're not going to buy. Okay, so the most important thing in the market is to wait. Okay, wait once until the market react in a certain way that you want. If it doesn't, secure your profits, secure your funds. Don't trade, don't do anything else. Okay, so all you need to do right now is to see if the market will turn over here. That simply means that you are anticipating a certain reaction, and therefore it's going to go up. Okay, it's going to go up. Okay, so now if you are not a reversal trading, if you are a breakout trader, that simply means that there is a certain candlestick that you're going to wait for them once until they break, and therefore sometimes it's going to do this. It's called a fake breakout, and therefore the market will shoot down. Where it's shooting down is shooting down to a bigger support, a biggest support that we have already identified. Okay, so here is the support. Okay, so the most important key in the market is to wait. Once until you wait, the market is going to react in a certain way that you are familiar with, and therefore you execute. Other than that, secure your funds, don't do anything.